This is Kanessa Io, and I will be bringing you Lecture 12 on Equity and Efficiency. When individuals come together in a voluntary fashion, we always have the potential for both parties to gain. We'll look at a couple examples here. When landlords and peasants, buyers and sellers, and capitalists and workers engage in interactions, both parties have the potential to gain. Think about the intuition for a capitalist and a worker. A capitalist owns machinery and hires laborers to operate the machinery. Both parties have the potential to gain. The capitalist has somebody to operate while the workers receive a wage. Now, institutions are important because they determine two elements. The first being who does what. In our example previously, the capitalist will own some type of machinery while the workers will operate it. And the second thing is who gets what, thinking about how the gains from that interaction are split. We'll walk through a quick review of the model that was covered in the previous lectures. Recall that when agreements are voluntary, we have this imaginary line from C to D illustrating our Pareto efficiency curve. In this case, Bruno has to make Angela an offer that is better than her reservation option at point Z. In this case, Angela receives 16 hours of leisure and works 8 hours. The total surplus is 4.5 bushels of the total produced being 9 bushels. And if there are a number of landless peasants who all are similar or homogeneous to Angela, then Bruno has all of the bargaining power and can acquire the entire surplus at point D. Then we have a new case when landless farmers organize or engage in collective action. They receive a new reservation option of F. In this case, Angela prefers F to D because it is on a higher indifference curve. Bruno's surplus falls from 4.5 to 2 bushels, and given that his surplus falls, we know that this is not a Pareto improvement. Another tell from this is that it does not lie on our Pareto efficiency curve from C to D. We can see in this case with the new indifference curve from C to G, given the new reservation option of F, we need to find a point that lies on that curve to illustrate a Pareto improvement. Now, we can see a couple of results once Angela and Bruno renegotiate after the collective action occurs. There are a number of opportunities because there are gains to be made given that the marginal rate of transformation is greater than the marginal rate of substitution. You can see this by the tangent points at E and F. Those little lines there, you can illustrate that with the slope. And then we can see at point J, they might agree on this allocation. They could agree on this allocation for a number of reasons. The first being that this is on a higher indifference curve than indifference curve 2, and Bruno still receives a greater portion of the surplus. So both of them would end up agreeing to this allocation, and this allocation would be a Pareto improvement from point D. Both parties would benefit in this case without making one party worse off. Often in economics, we discuss the fundamental trade-off between equity and efficiency. In this case, there are gains from trade between the landless farmer Angela and Bruno. In a capitalist market, we would expect them to arrive at some allocation along the Pareto efficiency curve. In our case, Angela is working 8 hours to produce a total of 9 bushels, maximizing the surplus at 4.5 bushels. And along that Pareto efficiency curve, it is impossible to make Angela better off without making Bruno worse off, and vice versa. The things that we're really considering here are fairness. Fairness is primarily determined by institutions. So how they split these up really depends on what type of institutions are in place. If we have some sort of welfare determining the reservation option in terms of Angela receiving some government assistance and so forth, those will be a primary determinant of the final allocation that is chosen. Another thing is the bargaining power. So think of things like higher minimum wages and so forth. Those increase the bargaining power of workers, and those will alter the allocations that we come to. We obviously have a variety of institutions across different countries. Comparing the European versus American institutions, we can look at different examples here given by the top 10% of wealth. So we can see that the top 10% of wealth in the United States accounts for about 70%, a little over 70% of the total wealth in the US. And we can see that this has been increasing over the past 30 or 40 years, whereas we see the opposite case for Europe. So the top 10% in terms of how much total wealth is owned by the top 10% has been declining since about 1910 in Europe. And so this is aggregating across Europe. It'll be different for different countries within there, but this is a good illustration of different types of institutions and how those determine the outcomes for different countries. Today we'll discuss one of the primary measurements of economic inequality, utilizing the Lorenz curve. This will illustrate inequality within a population. The population is sorted from poorest to richest along the horizontal axis, or our x-axis here. And we can see that the cumulative share owned or received by X% of the population is shown on the vertical axis. We'll think about this example here illustrated in the graph on the right. This curve illustrates a community of 90 sharecroppers and 10 landowners. And so in this case, we can see a couple of things. That 90% of the population owns nothing, whereas 10%, or the 10 landowners in this case, own 100% of the land. And so what we see in this case is the blue line illustrates our Lorenz curve, and the distance between that black line, the line of perfect equality, and the blue line, our Lorenz curve, will illustrate the degree of inequality within this community. Now, after calculating the area between that Lorenz curve and the line of perfect equality, we get something that's called the Gini coefficient. And so this will give us an accurate measure to some extent of the degree of inequality within a community. How we calculate that is utilizing this formula. We're utilizing a number of different areas in the calculation. So we use area A, which is the area between the Lorenz curve and the line of perfect equality. And then B encompasses the rest of that area within this box. And so it's area A over area A plus area B. And so we can see that A plus B is always going to be the same number. It's just calculating the area of that triangle from 0 to 100, so that gives us a base of 100, and then going up to 100%, that gives us a height of 100, and dividing that by 2, that will give us 5,000 in the denominator every time. The only difference is calculating area A. So that's going to be something that we discuss a little further with a couple of different cases, but this is the formula that we're going to be using going forward. A couple of sort of border measurements to keep in mind is that when the Gini coefficient is 0, this implies that everyone has the same wealth or income. So think about this example. This would be an area of A, or when the area A is equal to 0, which means that the Lorenz curve is exactly equal to the perfect equality line. When it's 1, this implies that one person has all of the wealth or income within that country. This would be the highest level of inequality that we could feasibly think of. Now we're going to walk through an exercise that will compare distributions of wealth. This is exercise 5.9 in your textbook if you would like to work through it on your own first. But we have a couple of different cases. So we start with a village with 100 people and 100 hectares of land, and we'll have a couple different distributions. In case 1, we have 80 people owning nothing and 20 people owning 5 hectares each. In case 2, we'll have 40 people own nothing and 40 people own 1 hectare each, and then we have 20 people owning 3 hectares each. And then in case 3, we have 100 people owning 1 hectare each. So we'll walk through in the table below, and then we'll illustrate it graphically. So for the first case, we have 80 people owning nothing. So for the cumulative share owned by the bottom, at 0% they'll own 0. 40 they'll also own 0. And 80 they'll own 0 as well. Only the top 20% in this case own anything, and they actually own all of the land in this community. So 100%, remember that this is cumulative, so you should always be ending up with 100 when you finalize, or when you come to that final distribution in your cumulative share. And so this is what this looks like graphically. we can see that as we move from left to right on the horizontal axis, from poorest to richest, up to 80% owns nothing, and then that final 20% moves all the way to 100%, illustrating our Lorenz curve for case 1. For case 2, again, we have 40 people owning nothing, so up to 40, we should continue to have zeros. Then we have 40 people owning 1 hectare each. And so in this case, from 40 to 80, each of these individuals is owning 1 hectare. And then the final 60 hectares of land will be owned by that top 20%. Again, finishing at 100 for our cumulative share. Illustrating this graphically, we get this red line here for case 2. And we can see how it maps out with our illustration in the table, exactly the same. And then case 3 is the case in which 100 people own 1 hectare each. So 0, obviously starting at 0 out of the origin, and then moving forward, we can see that this illustrates a case of perfect equality. That is going to give us an area of 1,000 for B. We know that A is always going, or that A plus B is always going to be 5,000. So in this case, 5,000 minus 1,000 will give us 4,000 for A. And then doing our calculation for A over A plus B, this gives us a Gini coefficient of 0.8. Now for case 2, this is going to be a little more difficult, as we can see that we have a little break here in our movement. So for area B, we're first going to calculate that triangle for our first break. So from 40 to 80, so that gives us 40 for our base, 40 for our height, and that will be 40 times 40 divided by 2, which will give us 800. And so we'll keep that in our pocket there. And then we then need to calculate that trapezoid figure from 80 to 100. So we have 40 plus 100, 140 times 20, which is 2,800. B. Knowing that A plus B is equal to 5,000, we then subtract B from that formula, and that gives us 2,800 from A. Then finalizing the calculation, A over A plus B, and we get a Gini coefficient of 0.56. Then doing the calculations for the line of perfect equality, or case 3, obviously there is no area A here, and so what we end up with is A over A plus B would be 0 over 5,000, and we get a Gini coefficient of 0, illustrating perfect equality. Now we can talk about distribution and redistribution in different countries. So governments can decrease income inequality through a couple different mechanisms. The first being progressive taxation. So as you move up in higher tax brackets, as you cross certain thresholds, your income will be taxed at a higher rate after different thresholds. For example, after $100,000, each dollar after that will be taxed at a higher rate than the dollars from 50 to 100,000 and so forth. So these deal with marginal tax rates and means tested transfers. So this would deal with things like the Supplemental Nutrition Assistance Program in the United States, basically proving that if you have an income level below some threshold, then the government will supplement that income with food stamps, etc. Now, in the Netherlands, the government handles most of this redistribution. We can think about the Gini coefficient for market income being 0.47. So this is illustrated by area A in the graph on the right. And then we can see following redistribution in this case, we have area A prime, which gives us a lower Gini coefficient, implying lower levels of inequality within the Netherlands. And so we can see that this shifts that bottom fifth in terms of how much income they're receiving. So with the market income case, the bottom fifth is barely at 1% in terms of how much income they have. Following the redistribution, they account for about 10% of that disposable income. So thinking about this intuitively, is redistribution good? This is something that you want to have more of a nuanced discussion. When should redistribution take place? Should this be handled by the state? And so forth. What type of institution would you want to implement this? Should it be through means tested, or should it be through something sort of like universal basic income, where we just redistribute at a flat rate to all citizens? These are different discussions to have within this area. Now we can look at empirically the distribution over time. Another way to look at this is the income share of the top 1%. You can see that in the US, the top 1% accounts for about 20% of the total income share. And you can see this is pretty different relative to other countries. And income inequality declined in many countries until about 1980. And we can see that it has risen significantly in a number of countries, with the US being one of the largest increases relative to each of the countries in the graph here. Now we can bring the discussion full circle and illustrate how this connects to institutions. I encourage you to go into your text to look at this example of land reform in West Bengal, basically illustrating a quick example here. So we have the institutions prior to a land reform, in this case where farmers are accounting for 50% of the initial income. We can see the Gini coefficient in this instance is 0.4. Then we receive some institutional change where land reform is engaged. This is something that occurs through the political process. And after the land reform, we can see that the farmer's share of income increases, which reduces the level of inequality here. So the Gini coefficient falls from 0.4 to 0.15. So look at your text for a more detailed example with this illustration of West Bengal. But institutions can reduce inequality. They can also increase inequality as well. It's important to have that discussion as to what type of institutions tend to sort of move towards one direction or the other. Returning to our discussion of efficiency and equity, we think about our example with Angela and Bruno and the different elements that we learned from that story and the Bengali sharecroppers. Thinking about first, when one group has all of the power and they're only subject to the other person's reservation option, the powerful party will capture the entire surplus. Thinking about when Bruno was capturing 4.5 bushels because he had some sort of dictating power. Second, an exploited group may be able to improve their economic lot via politics. So the West Bengal example leading to land reform and increasing the farmer's share of income. Third, we can reduce inequality, or reducing inequality can increase the surplus, but it does not usually generate a Pareto improvement. And so this is often because redistribution implies taking some money from some individuals and redistributing that to the rest of the population. And fourth, your support for egalitarian or hierarchical institutions depends on conceptions of fairness. So how you believe something should be distributed, your normative beliefs in that case, will determine sort of the positive or real economic implications from different policies. This week you'll walk through homework 2.2, and this will involve sort of using empirical data to calculate different Gini coefficients for a country of your choosing.